All right, guys, the Activision-Microsoft merger is still in limbo. Warren Buffett has a bet. He has bought Activision shares, betting that Microsoft will be able to buy them. He has purely said, listen, I don't know if it's going to go through or not. However, Microsoft's got a lot of money, and they want this company, and it's a cash deal, but it has to pass the regulatory issues. Mo, what happened in the last few weeks, actually last few days, having to do with EU?
Yeah, this was the day before. Well, this was the day before Thanksgiving. The Politico reported that the FTC, Federal Trade Commission, is likely to file a lawsuit in order to block the purchase of Microsoft going after Activision Blizzard. Yeah, so Politico's source tried to make it clear that the lawsuit wasn't a foregone conclusion and a member of the FTC hadn't yet taken formal action towards that. And then I've seen a lot of whisperings out there, Microsoft likely to offer EU concessions soon in the deal. So there's a lot of, this is the EU side now. I thought that the United States side was kind of clear, and then that Politico story came out.
And which, by the way, it's still a back and forth. So guys.
And we have until, we're going to figure this out, and I think June is the closing date.
I don't remember, what's the price they're purchasing at?
$69 billion.
Yeah, but what's the per share price?
$95 on the nose, I believe.
Is it really that much? So Activision. So if it's $69 billion, the company is currently at 58. Yeah, so that's, quite the premium to today.
Yeah.
Almost a 20% premium today, which adds up correctly. So, guys, what is an arbitrage play? An arbitrage play, and this is what's important, that I know that we're going to use a lot of terms, and there's a lot of terms used out there in the media that are confusing. That's why I encourage you, subscribe to the channel. We do 2-3 videos a day. We have thousands of videos out there. We try to explain things as simple as possible. An arbitrage play is, there's an event that's going to occur in the future, like Activision being bought out for $70 billion, so call it $90 a share. I don't know the exact number. And you can buy it now for $75. Now, a lot of times when these deals are offered, if everybody thinks it's going to be easy, the price goes right up to where it was. But if you remember, look at the Twitter deal with Elon, right? Elon was buying it for like $53, $52, $54 per share. It skyrocketed. Then when everybody thought he'd bailed, it fell, and then he ended up buying it anyhow.
Yeah.
And it's $95 a share.
$95 a share, yep.
Okay. This is the whole point of an arbitrage play. Do you think it's going to happen or not? If you're like Warren Buffett and think Microsoft's going to get this company, then you buy the company all day. Why? Because you can buy it for $74 today. You'll get $20 in profit by June. That's almost a 30% return for a few months. But the reason there's so much meat on the bone is it's a big question. Mm-hmm. These countries and groups can really stop these plans from happening. Yeah. Now, what's the benefit to Microsoft of owning Activision? Mo, well, first off, Mo, why are you excited for this? Why are you excited for Activision?
I don't care if this deal goes through. Something amazing happened that made this worth $69 billion. We found out in the documents that came out that in 2024, Grand Theft Auto 6 will be coming out.
I never played Grand Theft Auto in my entire life.
It's the greatest game ever invented. And I'm not even a gamer. It's awesome.
Are you going to buy a PS5 just for that?
If I have to. That's what I did for PS4. I literally bought a PS4 to play Grand Theft Auto 5, played it for like 3 hours, and haven't played it since.
Well, then how can it be the best game ever if you only played it for 3 hours?
Because I love testing things. You know that.
All right. Mo's rich. So when it comes to this, the question you have to ask yourself is, in an ideal world, do I want to own Activision Blizzard even if Microsoft doesn't buy them at this price? Because in an ideal world, you're like, hey, you know what? I want Activision at $75 anyhow because they make great games. But the question is, do you really want it at this price?
Right. So prior to the deal, do you remember all of those things that were going on with their sexual allegations of their CEO and whatnot?
Yes.
And the price fell to, what was it, like 50?
By the way, wasn't the CEO being accused of it, I don't think. I think it was he was just turning his head away from it.
Okay.
And by the way, their CEO played a part in the movie Moneyball. He played the owner of the Oakland Athletics in Moneyball, the movie.
So I remember when this was hovering around that 50, 60 area, and I was like, ooh, this is getting very interesting as far as pricing goes. So I'm excited to see what price we put on this today. I haven't done it yet.
And it hit a low in February of 2019 of $41 a share.
Wow.
Where did it go for COVID?
So COVID, it went to 50,
somewhere around
$52. It was its low.
So let's go look at the 8 pillars on Activision Blizzard. So a couple things. Very expensive PE ratio and price to free cash flow. So you might be wondering, why is Microsoft buying such an expensive company? Well, they probably have some synergies. Microsoft has 1 billion programmers. Can they merge it with their company? Can they eliminate a lot of costs, a lot of overhead costs, et cetera, that drive up this profit margin from 22.8% to 30%? I don't know. I'm just being I'm just randomly saying that. But if they can get an extra 8%, that's a 33% increase on their profit margin. And now they theoretically could say, if you want to play Grand Theft Auto or any of these other games Activision makes, Call of Duty,
especially Call of Duty,
you got to buy an Xbox.
Exactly.
You can't. They haven't said they're going to do that.
No, I think if they said that, that would kill the deal.
Yeah, you're probably right.
So they should just stay quiet on that front, which I think they've done. Now it's interesting. Remember, Sony went out and tried to buy. What was that gaming company that they tried to buy?
I don't remember.
It was kind of in response to them. I don't remember what it was, but they did it in
Zynga?
response.
No, I'm kidding.
Something like that. I could look it up for us.
Yeah, look it up. So they've issued a couple of shares, which I'm okay with because considering how expensive their stock price has been relative to value. But the other things, reasonable debt. They can pay off their debt with 2 years of free cash flow. A decent ROIC. I'm actually surprised with how low this return on invested capital is for a software business. So this isn't a great ROIC, but it's not awful. It hits our threshold, which is fine. Increase in revenue, increase in net income, increase in cash flow. Now, one of the things I want to point out, their revenue is only up $200 million over the last 5 years, but their profit's up $1.1 billion and their cash flow's up $700 million. That leads to a question. What happened there that revenue can only be up so little, but profit can be up a ton? So revenue, okay, 7.16, 577 to 1.67 billion. Other income expenses are about the same. Maybe just more efficiency. Gross profit. Yeah, gross profit got better. Their gross profit really got a lot better. Look at this. Their cost of goods sold went from 2.5 billion to 1.73 billion on pretty much the same revenue. That's a 30% decrease almost. Is that 30%? About 30% decrease in their cost of goods sold. And that drives right to the bottom line. And that's helped out a ton. All right. Cash flow, same thing. It's going to be the exact same thing. Now let's go look at the analyst estimates. What do the analysts think the company's going to do if they stayed independent?
Right.
I mean, it's 2.5 times EPS growth. Big time revenue, big time EPS growth numbers. Revenue wise, all right, not huge, not bad. All right. So it's about a 25%, 28% increase, 30% increase in the next 5 years. All right. 30% increase next 5 years. 5-6% growth a year, yep. Fine by us, whatever. 6-7%. The point is, it's not a huge grower.
No, it's not.
Hopefully, it's a shower. By the way, that would not have been as good had you not said "ha" right afterwards. All right, so let's go look at our stock analyzer tool. Now, remember, guys, the stock analyzer tool is the most popular part of our software that our community members pay for. We look at the data. 60% of our page views are stock analyzer tool because it allows somebody to make assumptions about the future to determine what price to pay for the stock today, okay? I think we'd all agree that Activision Blizzard is going to be around for a long time if Microsoft doesn't buy them.
Yeah.
They make great quality games, so I'm putting a 10-year analysis here. Now, Mo and I are going to separately make our assumptions on revenue growth, profit margin, free cash flow margin, PE, price of free cash flow, and finally, our desired return. Because our goal here is to say, hey, ideal world, let's say hypothetically the company was selling for $30 a share, and Microsoft wanted to buy them for 95. If they were selling for $30 right now, I'd probably buy them going, listen, it's a 10 PE. If they don't buy it, I still get a great company at a low price. If they do buy it, but at some point in between 30 and 95, it doesn't make sense anymore.
Right.
And you should assign some value to the deal happening. So, Mo, let's go ahead and do this. Doing my revenue growth first. I make low assumptions on the low side, middle assumptions being about where I think it should be, and high assumptions being, hey, they kill it. So profit margin was pretty consistent. Oh, free cash flow is significantly higher than profit margin, Mo. Do you see that?
Yeah.
Okay. PE. Okay. They do have a good brand. My desired return. All right. Let me know when you're done, Mo, because I've made my inputs here.
Okay.
Mo's still several lines behind me.
No, because I did the profit like 4 times.
Did you?
I just kept toying with it in my head. I'm like, I don't know what to do here.
All right, well, that's good.
I went high and then I went low and then I went back to low. Okay. All right, let's do it.
All right, so here are my, Mo, what's your revenue assumptions?
1, 3, and 5.
Okay, I did 2, 5, and 8.
Okay.
Now, the reason I did 2, 5, and 8 is because I thought on the high side, let's say they find another banger of a video games. Hey, is there a chance they do? Absolutely. They find another series like Call of Duty. They do Call of Duty, right?
Call of Duty, that's a big thing.
And not Game of Thrones, Grand Theft Auto.
Yeah.
And they're able to hit another home run there. All right, profit margin, what'd you do?
19, 21, and 23.
Okay, I did 20, 21 and a half, and 23. Okay. Because I did 20 thinking to myself, it's still lower than its 10-year number.
Yeah.
But I don't think Mo's is bad. I'm like, okay, it's probably better than mine. Free cash flow.
27, 29, 31.
Okay, 26, 28, 30.
Okay.
So we're hovering. You see what's going on here, guys. We're making assumptions. And everyone in our community, the thousands of people, they always share this screen for exactly that reason, because they ask people, are my assumptions reasonable? Now, PE and price of free cash flow.
I did 13, 15, 17 for both of them.
So I did 14, 16, 18. And Mo, we probably should have signed a different metric
because
of how big they're. But listen, it's all fine for right now. Yeah. What was your desired return?
12 and a half, 15, 17 and a half.
You know, it's funny. I wanted to put that in there. I bet 12, 14, 16, only because of how low that thing was.
Yeah. Sense.
All right, so hit the analyze button. The stock's currently at 74.50. Mo, what are your prices?
Whoa.
Yeah, big time difference.
Low end, $18 to $26. High end, 24 to 32, and my middle ground's about 21 to 29.
I'm in the low part of like low to mid 20s, high side of 40. Yeah, guys, this is expensive.
I was expecting this stock price to be somewhere at like $45.
So,
honestly,
so to me, my personal opinion, for me, I am not, the ROIC isn't high enough to assign a bigger multiple. To me, yes, is there a chance the deal goes through? Sure. But I look at this $45 and say, okay, would I be willing to pay 50 for it because of the chance of a deal going through? Sure. But guess what? Who disagrees with me? Warren Buffett. So guys, analyze it yourself. But here's the key. Just because Warren Buffett did it doesn't mean Mo and I are going to do it. Yeah. I own 0 Activision shares. I hope the deal goes through for Microsoft purposes, but I own 0 shares of it. Remember, watch these videos. This will make a lot more sense as you repeat these videos over and over. Don't forget to subscribe to the channel. Thanks, guys.